Hey, it's Arjun, CEO of Doola, and in today's video, I'm going to explain how you can start angel investing with an LLC today. Let's dive in. Mike Walsh, Orrin Michaels, you've probably never heard of them before, but they both angel invested $5,000 into Uber's seed round. Now, I want you to guess how much that $5,000 investment turned into. $25 million. That's a 5,000x return. Angel investing can be incredibly lucrative and provides asymmetric upside, where you put in a little bit of money and you can get a lot of return in terms of financial upside. If you want to start angel investing, watch this video. Here's how to get started, and I'm going to answer whether or not you need an LLC to start angel investing, as well as some of the things to keep in mind when starting out with angel investing and LLCs. For angel investors in the US, it's worth considering whether setting up a limited liability company to manage your investments is a good option. There are several benefits to doing so, such as the ability to organize investments across multiple people, the ability to maintain privacy, the ability to build an investing brand, the ability to manage business-related expenses, and to easily transfer ownership. However, it is important to note that investing through an LLC typically doesn't offer any tax advantages compared to investing as an individual. So while there are advantages to starting an LLC for angel investing, it's important to weigh these against any potential downsides before making a decision. Let's dive in to see if setting up an LLC to angel invest is the right decision for you. First, what is an LLC? In simple terms, an LLC or limited liability company is a legal entity that's established to operate a business or hold assets. It's a flexible structure that can be owned by a single person, known as a single member LLC, or by two or more people, known as a multi-member LLC. In a nutshell, an LLC helps protect its owners or members from personal liability in case the company faces legal or financial issues. This means that their personal assets, like their homes and savings accounts, won't be at risk. So, while forming an LLC isn't always necessary to invest, it can be a good idea if you want to protect your personal assets from any potential legal or financial troubles that the company might face. Next, what is angel investing? Angel investors are individuals or groups of high net worth people who provide capital for startup businesses. They are a form of venture capitalists, investing in risky startup companies with the hope that these investments will yield high returns. Angel investors typically invest their own money rather than borrowing funds from financial institutions, and they often provide guidance as well as money to help the startup succeed. Angel investors usually have an entrepreneurial background, which makes them ideal mentors for young entrepreneurs. Angel investors may also take on roles such as advisors or directors in the company if necessary. Their role is often focused on building relationships between the company and potential customers or strategic partners. They also provide emotional assistance and encouragement during difficult periods when morale is low or expectations are not being met by startups' employees or the management team. Next, I'm going to run into 7 reasons why you should consider starting an LLC to angel invest. Here are a few of the main reasons to start an LLC when angel investing. Limited liability. Starting an LLC can protect an investor's personal assets in case of legal or financial issues with the companies they invest in. For example, if an angel investor invests using an LLC, they can only lose up to the amount they invested if the company fails. They would not be liable for any other debts or obligations of the company. With an LLC, the investor's personal assets such as their home, savings, accounts, and cars are all off limit to creditors of the company. This means that if a lawsuit were brought against the company, none of the investor's personal assets could be taken away. Pass-through taxation. LLCs are usually taxed as pass-through entities, which means that profits and losses of the business go through to the individual investor's personal tax returns. This can lead to potentially lower tax rates than other business structures. Self-employment tax. Starting an LLC for angel investing can provide a tax benefit through its pass-through taxation structure. This means that instead of the business being taxed at the corporate level, the profits and losses of the LLC pass through to the individual investor's personal tax returns. This can result in potentially lower tax rates for LLC investors compared to other business structures, like a C corporation, which is taxed both at the corporate and individual levels. Flexibility. LLCs offer flexibility in terms of ownership and management. Investors can divide ownership and management responsibilities in a way that works best for them, instead of being subject to a strict hierarchy. Privacy. Investing through an LLC can protect an investor's personal information and avoid potential unwanted publicity that may come with high-profile investments. Investment vehicle. By starting an LLC, investors can pool their resources together to make joint investment decisions. This can give access to a larger pool of funds, allowing for bigger investments than would be possible as an individual investor. Exit strategy. One of the reasons to consider starting an LLC for angel investing is the importance of having an exit strategy. An LLC can provide flexibility and control for investors when it comes to exiting an investment. For example, if an LLC invests in a startup company and the investment eventually becomes successful, there are various ways the LLC can exit the investment and realize its profits. This can include selling the LLC's ownership stake in the company to another investor or strategic buyer, or the company may choose to go public through an initial public offering. How to start an LLC to angel invest. To form an LLC to angel invest, there are a few key steps. Deciding on the name for your LLC. This can be anything that isn't already taken by another existing business in your state. File the necessary paperwork with your state's Secretary of State to register your LLC and make it legally recognized. Create an operating agreement for your LLC, which is the document that outlines the rules and regulations of the company. This should include how investments will be made, how profits will be distributed, etc. Obtain any necessary licenses or permits required by law to carry out angel investing activities in your state. Open a bank account specifically for the LLC and deposit any funds you plan to use for investments. Determine which type of angel investor you want to be. Do you want to be an active angel investor or passive? And what types of investments you would like to make? Real estate, stocks, cryptocurrency, what types of startups excite you? Research potential investment opportunities thoroughly before making any decisions. This includes researching the industry, analyzing financial statements, reviewing legal documents such as contracts and partnerships, agreements, talking with other investors about their experiences with a particular opportunity, and doing deep dive research into the industry or specific verticals. Negotiate the terms of each deal carefully, and don't be afraid to walk away from anything that doesn't feel right or meet your expectations in terms of return on investment or ROI. Monitor each investment closely after it is made to track its performance and take corrective action if needed. Now, there are also several factors to consider before forming an LLC. While forming an LLC to angel invest offers many benefits, there are also some potential disadvantages to consider. Here are two factors to keep in mind. First is the cost and complexity. Compared to other business structures, forming an LLC could be more costly and complex. There might be filing fees, legal fees, and ongoing maintenance costs associated with running an LLC. Also, the legal requirements and regulations for LLCs can be more complicated than for other business structures. The limitations are also something you should keep in mind. While an LLC can provide some liability protection for investors, it may not be foolproof. In some cases, courts have been known to pierce the corporate veil of LLCs, meaning that personal liability can still be imposed on investors. To avoid this, it's important to ensure that the LLC is properly structured, maintained, and operated according to the law. If you are looking to start angel investing and need an LLC, Doola can help. Starting an LLC for angel investing can offer a range of benefits, such as limited liability, pass-through taxation, pooling of resources, flexibility, privacy, and branding opportunities. However, it is important to consider the potential disadvantages, such as increased paperwork and costs, and potential limitations on fundraising. Regardless of the decision, proper bookkeeping, tax management, and financial management is crucial for any business owner. Doola can also provide the support needed to simplify your bookkeeping and financial management, allowing you, as an angel investor, to focus on your core operations and investment strategies. Last but not least, I'm going to go through some of the most frequently asked questions we get when it comes to angel investing. Do angels invest in LLCs? Yes, angels can invest into your business if you have an LLC. Although it's important to note that this type of investment carries a higher risk than other forms of investments, since LLCs are not subject to the same regulations as corporations and other business entities. Angel investors typically look for strong management teams and well-developed plans for growth before investing. Typically, an angel investor will invest if you have a Delaware C Corp. So oftentimes, if you're looking to raise US venture capital from institutional investors or an angel investor, we recommend a Delaware C Corp. Who owns an LLC investor? An LLC investor is owned by its members, who have invested either capital or expertise into the venture or both. The ownership structure of an LLC investor is flexible and can be tailored to fit individual needs. However, all members will own a share of the business and will need to agree on decisions regarding investments and operations. Do you need a business plan when you're speaking with angel investors? Yes. Presenting potential investors with a detailed business plan is essential when seeking angel investments. The document should include information about your company's product or service, competitive landscape, target market, management team, and financial projections. A thorough business plan goes a long way in convincing angel investors that your venture has the potential for success. What type of companies do angel investors invest in? Angel investors typically seek out early-stage businesses with high growth potential in areas such as technology, healthcare, and sustainable energy solutions. They may also invest in more established enterprises that are seeking capital to expand operations or launch new products or projects. Ultimately, each angel investor decides which ventures they wish to support based on their criteria and preferences. What percentage do angel investors take? The amount of equity taken by an angel investor will depend on the amount of capital being invested and the amount of risk associated with the venture. Generally speaking, it could be anywhere between 5% to 25%. Some angel groups may require additional privileges, such as board-level representations or preferential voting rights, in exchange for providing funds to startups or businesses looking for investments from private sources. That's a wrap. I hope you now feel like you understand what you need to do in terms of setting up an LLC to start angel investing. And if you have any questions on angel investing or setting up your LLC, do not hesitate to reach out. Last but not least, if you're looking to learn more about angel investing, check out Hustle Fund's Angel Squad program, where they teach you how to start angel investing today with as little as a $1,000 check. And if you're looking to set up an LLC to start angel investing, check out doola.com, where we can help you form an LLC, set up a bank account, and handle your ongoing compliance and tax filings year over year. Thanks for watching the video. Let us know if you have any questions, and see you in the next one.